We know that insurance can be confusing, and Palliser wants to make things as easy as possible. You work hard, and we want to put your farm in the best position possible for the worst-case scenarios. Insure for profit, not just your costs. If your costs are $200 per acre, you could insure for just $200 per acre, but who wants to work for free? With deductibles, you can guarantee your hard work won't get crushed. Each deductible provides you with a different level of coverage, so you can choose your level of risk tolerance. The general rule is that the higher the deductible, the higher the discount, and the higher the deductible, the more coverage you can receive without paying more. There are several kinds of deductibles. 10% disappearing deductible, 20% disappearing deductible, 10% increasing payment deductible, and 25% straight deductible. For a 25% straight deductible, the farmer is responsible for the first 25% payment, regardless of what percent of loss is seen. For a 10 or 20% disappearing deductible, because of the reduced rate at which the 10 and 20% disappearing deductible is written, the farmer is paid by Palliser only when the loss exceeds 10 or 20%. After this percentage of loss, Palliser covers the percent above the deductible. For example, if the loss is 30%, the farmer pays the 10% deductible, and Palliser pays the 20% above that. With a 10% disappearing deductible, this changes when the loss hits 40%. In this case, the farmer pays no deductible, and Palliser pays all 40% of the loss. For a 20% disappearing deductible, this change occurs at 60%, where Palliser would then pay all. For a 10% increasing payment deductible, Palliser covers the loss when the percentage of loss per acre exceeds 10%. Once the percent of loss exceeds 70%, an additional 1% shall be paid for each percent of loss in excess of 70%. For example, at 80% loss, you pay the 10% deductible, and a 10% increasing payment is added, and Palliser pays 80%. The payable percentage may not exceed 100%. The disadvantages of deductibles. 10% deductibles must exceed 10% to respond. 20% deductibles must exceed 20% to respond. 25% deductibles must exceed 25% to respond. 10% deductibles do not disappear until 40 or 80%. 20% deductible does not disappear until 60%. 25% deductible never disappears. The advantages of deductibles. Effective for premium cost savings. Used to increase per acre coverage instead of premium savings. Deductibles disappear, except for the 25S. All match full coverage at some point, except for the 25S. Can be used as a standalone policy, though best used as an additional policy to top up full coverage. Covers more profits than costs. Determines risk tolerance levels. Full coverage premium, if fully used to purchase a deductible, can pay more in higher damage storms. A full coverage policy is best for protecting your costs, and a deductible policy is best for protecting your profits. The combination of the two, full coverage and deductible, does both. Full coverage protects your costs, and a deductible stretches your dollar as much as possible. With the deductible discount that you get, you can put more insurance dollars on per acre for the same price as full coverage. Most farmers find that insuring their cost with a full coverage policy and supplementing with a deductible is the best option for protecting their hard work. This practice ensures for profit, not just your costs. For more information, download our deductibles package. Reach out to your agent or to Palliser directly to go through your options in depth.